Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. There's an awful lot going on in the world right now. One of the things is Brexit. Let's get the chart started. Let's get the chart started right here, and let's open up. And British Prime Minister Theresa May asks for an EU for a Brexit extension until June 30th. Now, here's the thing about this. She wants it way until June 30th. That's way past the elections that the EU is having. So Britain would have to join in the elections, the European Union elections. So the thing is we haven't heard nothing from the EU on this. They haven't said, okay, yeah, we're going to give you. Now, do you remember before, whenever she wanted an extension or whatever, she goes over there, you'd hear right away, okay, she's going to get the extension, bang, right? This time we're not hearing nothing. Now, I'm going to ask you something. If you were to go over to your friend's house and they had a nice coffee table there, and you eyed it up, you said, can I have that coffee table to them? And they don't say nothing. Generally, if they're going to give it to you, generally they're going to say, okay, yeah, you can have the coffee table, but they don't say nothing. You say, can I have it? Can I have it? Can I have that coffee table? And they don't say nothing. And then you go home and you don't hear nothing about it. It means that they don't really want to give it to you. Now, I could be wrong about this. Maybe I'm putting something to nothing. Maybe they'll come up next week and say, yeah, okay, we're going to give you this long extension way off into June. But don't hear nothing out of the European Union. It's a bad sign that perhaps they're not going to give her that extension. So we need to be prepared for that, because the markets certainly are not prepared for it. I've never seen the markets pumped up higher than they are right now. Let's take a look here at something else. Now, this is something that I've been known as coming for years, and yes, right now it's only a threat. But the Saudis have threatened to ditch the petrodollar. Okay? You know what makes it the petrodollar is the arrangement between the United States and the Saudis. It was created way back with Kissinger. Way back in the 70s. This is what made it the petrodollar. This is what gave America this ability to be able to, because they could only purchase oil with dollars in the world, and this was a loose peg to the dollar to oil, and this is what backed the dollar. Now, here's the thing. All of the other fiat currencies are all back to the dollar, and the dollar's back to oil, so there is a peg there. It's a loose peg between oil and the dollar. You break that, and then the dollar's pegged to nothing. And all the other world currencies that are pegged to the dollar then are pegged to nothing too. Take that into consideration. Now, we got an up and rising. I'm not going to call it a currency, but actually they do call it cryptocurrency. But it's not really currency. It's actually like gold and silver. It's money. And it is deflationary, rising against all of these fiat currencies that are inflationary. You might ask, well, what does all that mean? Inflationary, deflationary, we don't understand. Well, if the exact opposite from an inflationary currency is a deflationary currency. And what a deflationary currency will do if you put it up against an inflationary currency is money will always run, like back during the end of the Roman Empire, they used to have these coins. They used to coat the coins with silver, because they were debasing the coins. Now, in an earlier period in time, what they would do is they would go out and they would make the coin pure silver through and through, all the way through the coin. But at a time come in the Roman Empire when they were coating the coins with silver. They were like dipping them in silver. And then they would distribute the coins out. Well, there was people that came along and they'd scrape the silver off and then they'd spend the coin. And they made that their business. Because the Roman Empire was so big, it was like America is now, it was a huge empire, and these coins were the sovereign of the empire. They were the money, and so the coins still had just as much value with the silver stripped off. So people would come along and strip all the silver off, and then you reuse the coin, and they'd get the coins for the face value. The same thing they did back in 1964 in the United States when people picked out the white-looking coins, the silver coins, out of the currency in the United States back around 1964, and they put the good ones away. People will always chase after good rather than bad. They'll take the good. Now, when you take and pit a deflationary currency against an inflationary currency, the deflationary currency will be the one that's appealed to. It'll be the one that people want to save. Whereas an inflationary currency that's losing value, they will just spend it. And they'll spend it faster and faster. So that's what we got. We got a deflationary currency. Okay, it's not as big as the dollar. The dollar's, if the dollar was a watermelon, it would be a monster. And and all the Bitcoin is right now is like a little grape compared to a monster watermelon, size-wise. But it's sucking up, it's deflationary. And a deflationary currency is like a black hole for money. You know, that's where savers will go. And ultimately. So we got this. We got the petrodollar going down. So what is happening with cryptocurrency today? Let's take a look at the markets, and I'll tell you what. This is coin market cap. I couldn't really get my good Bitcoin graph chart today for some reason. That's $176 billion of Bitcoin dominance of 50.4%. And Bitcoin is just over $5,000, $5,029. And it's seen quite a raise in price. Now, if we take a look here, we see Ethereum is $165, XRP is 36 cents, Litecoin's $88.72. Litecoin has done rather well through this up in price of all the cryptocurrencies. Take a look at Bitcoin today. This is the chart I was able to get right here. And you can see this monster upheaval in price. It come rather suddenly and rather quickly. But it hasn't really ended. It's still moving up in price. We had a surge up in price right here to $5,308. And then it dropped back. I was expecting that. On my channel, I predicted that. I predicted to fall back in price. I called it a price correction. So the price did correct. I said it went up too fast, and I said the price is going to correct. So we got the correction that I was looking for, and now we're stumbling along. We're starting to heat back up again. We're starting to heat back up in price again. So it's doing rather well. Cryptocurrency is right now. And I believe if it breaks past $6,500, that we could enter back into a bull market. Now let's take a look at silver today. Silver's bouncing along at $15.14. Silver's actually done pretty well. It's come out of this awful smackdown that it had, and it's restored its price back up into its range again, which is a good thing. You know, that's solid that it does that. But it's down a penny on the day, $15.13. Let's take a look at gold. Gold is at $12.90, and she's right in the middle of her range, that's new range she's established for herself, in just under $1,300. I think the precious metals are getting ready to make a breakout pretty soon, you know, and go bullish. This is what I comprehend happening. I also said on my program that when Basel III came into effect and gold could be a tier 1 asset on the banks, I said that you're not going to see a huge spike up in price. I said that on my channel. And now we see that we've had 5 days of Basel III coming into effect, and we haven't seen any huge spikes up in price. In fact, the gold has dropped down below below $1,300 again to $12.90.50 right now. It's down $1.40 on the day. But does this mean that Basel III is not going to have an effect on gold just because it did not have an immediate effect? Heck no. Heck no. It's going to have a huge effect on the price of gold. Ultimately, in the end, it's going to be huge, Basel III. Once gold starts breaking away, that is the signal for the banks. See, normally when the banks have to take gold as less than a tier 1 asset, they can only count it in their reserves as 50%. This is the way it used to be. They can only count the gold in the reserves as 50% if it's less than a Tier 1 asset. And that's the way gold used to be. So say they had 1 ton of gold. You know, they could only count half a ton of gold as a Tier 1 asset before, like on their asset books. Now that it's a Tier 1 asset, they can count the whole thing as part of their assets or part of their portfolio. So that makes a huge difference to the banks. And this was before, when they couldn't count it as a Tier 1 asset, was eliminating them from keeping gold. Now there's no reason for them not to keep gold. And once the gold price starts to rise, once we start to get legs under a rally, this means, because of this change in the way gold is counted as an asset, means that the banks will want it much, much more, and they'll start keeping it. And so this is where it's going to receive. We could see these hikes in gold. This is open. Basically, I guess what I've been trying to say is this has opened the door for gold. It's opened the door for a gold rally that, like you've never seen before. That's what it's done. So now let's take a look at the Dow Jones Industrial Average for this morning. What we're looking at is, let me refresh the page right here. She's up 30 points on the day. 29 points on the day. 26,413. And I'll tell you, if something goes wrong with Brexit, the way this market's been pumped up, if something goes wrong with Brexit, and they have to have a what's called a hard leave the European Union with a hard Brexit, this market could get devastated because of the way it's pumped up. You know, this long rally right here over really nothing, over maybe hopes that there's going to be a trade deal or whatever. I mean, come on. Okay, now let's take a look at crude oil. Crude oil's up 37 cents on the day. $62.47. And this has been a slow but steady increase by OPEC. OPEC is behind this. Now let's take a look at bonds and rates. Now what we're seeing is, we're seeing the bond yield starting to rise. And they're still terribly low. The U.S. 10 years at 2.51. U.S. 30 years at 2.92. U.S. 5 years at 2.32. And U.S. 2 years 2.34. We're only seeing 1 basis point rise on the U.S. 2 year, and there's almost no movement on the U.S. 3 month. It's only up 0.02. We're seeing very little movement on the long end of the yield curve here. They're only up marginally. The biggest move was in the 2 year at 1 basis point, which is not a lot either. So they are moving up, but they're not moving up very much. Now let's take a look at the U.S. dollar index. 97.35. It's up very slightly, but I consider this to be extremely strong for the dollar, considering all of the aspects of what's going on in the world with the dollar. How the undermining of the dollar, especially in the East, and how the dollar has been overinflated in the West. You know, considering what the dollar has been through, this is probably the most resilient currency on earth. It should be much lower than it is right now, considering everything that's happened, all the water that's went under the bridge. The moorings have all been taken out of it. I'll tell you what it's like. It's like an old barn, you know. You go inside and you chop all the beams down with an axe. And so the barn's basically just sitting there, and then you say to your friend, hey, you know what? We're going to pull this barn over today. So you go and you get yourself a big Jeep, you know, and you tie a chain to the end of to the roof of the barn. And, you know, you say, this barn's going to come over so easy, it's going to fall down like nothing. And you start pulling with that chain, and that Jeep's spinning its tires, and the barn ain't going nowhere. That's the dollar. All the moorings, but when that barn finally does come down, it's going to come down, poof, bang, gone. You know. But for some reason, it's like being a little bit stubborn. The dollar here, all the moorings are taken out from underneath it. Nothing. It's like a tree that's already been chopped. You know, and it ain't falling. It's just sitting there. It's just something holding it. That's with the dollar. But when she comes down, she's going to come down hard. So listen, thank you guys for listening to this report, and we'll catch you guys very soon again. Probably do a report on this this weekend, at least one. So bye-bye for now, guys, and don't forget, give me a thumbs up.